wanting us there. Then you had the financial advisors kind of fighting us to be there because all they wanted to do was put as much assets under management as they could, because that's where the fee-based business comes from. That's where they can sit back every January and collect their check. So, a lot of what we do, Steve, with this concept is we really help people to diversify and give them an opportunity to have some tax-free retirement income one day.
So you got the battle for dollars that with
Yeah.
the advisory community, which we talk about pretty often.
Constant struggle.
Yeah, but you have the the powers that be that would want the advisors to know about this in order to properly serve people.
Yep. And all of these are concepts, this concept is approved in every major broker dealer, Wall Street financial firm out there. It is. It's approved in there. It's just a matter of getting their people, their financial advisors, to shift from not wanting to be the life insurance guy. They want to be the broker. They want to be the stock broker, and realize that a lot of clients need this concept as part of their portfolio to give them some balance.
Yeah, so that's a good segue. So let's talk about what is an overfunded life product in general. You've handled a lot of different types of products. I know different companies, different platforms, such as like a whole life versus UL. So what are we talking about when we're talking about overfunded, and what options are there?
Sure. So when you're looking at an overfunded life insurance policy, what that simply means is you're taking a permanent life insurance policy, so not a term, not something that's going to only last 15 or 20 or 30 years. You're taking a permanent life insurance policy, and you are placing and paying more premium than what is needed to cover the cost of that policy. So most life insurance, permanent life insurance policies on the UL chassis, on the universal life, they have three main charges. You're paying more than what you need to. And by doing so, you're just simply redirecting those additional funds over the cost to go straight to the cash value account, where that money can begin to immediately start growing and compounding based off of whatever type of chassis we're using. If we're using index universal life, it's going to be based off of the indexes, the S&P 500, things like that. But the whole purpose of overfunding is all we're doing is we're taking advantage of one of the greatest gifts that the IRS has ever given us. And that is a section in the tax code called Section 7702, which just simply says that as long as this policy meets the definition of life insurance in the eyes of the IRS, then you can withdraw not only your cost basis, or you can withdraw or loan not only what you've put into the policy, but any of the growth you can withdraw and loan that money out without any taxable event. So the tax code is set up for success. And it's kind of this one time. I mean, think about it, Steve. How many times do we get frustrated? And I know just, middle America, common America out there, we get frustrated. We see all of these rules that are really bent and built for the one percenters, right? For the people that have money. And this is the one time you can act like a one percenter. This is the one time you can take advantage of something that we always feel like that the game is rigged, for the wealthy. This is the one time that you can, anybody with any type of income whatsoever can take advantage of this concept and really turn something special tax-free for you in retirement one day.
Yeah, that's a great point. So in other words, you can max out the cash in there by overfunding and get that tax advantage under 7702.
Yep.
We often talk about the fact that 7702 is a provision that probably most people, I'd say 9 out of 10 people, aren't aware of in the tax code. Of course, everyone's aware of 401k. So this is an alternative, and
Sure.
probably you can argue a diversification strategy, to say at the very least. And so, yeah, so that's what that is, 7702 overfunding. Do you have an example of somebody that maybe recently worked with that was able to put something together that they really saw the light and got excited about as a component of their overall plan?
Yeah, I mean, a lot of what I do, Steve, is we help people find where are we going to reallocate money in our lives over to the strategy. And one of the easiest places to do that a lot of times is figuring out what people are uh, what are they currently contributing to their 401k. So let's say you work for company X and company X does a 4% match. Well, I think you and I would both agree that it makes a lot of sense to take advantage of that free money. And we're certainly not telling you to completely cut off your 401k match and throw all of your money in an overfunded life insurance policy. That's not what we're saying. But a lot of our clients, our potential clients that have become clients, are people that are maybe the company's matching 4%, but they're putting 8%, 10%, of their income into that. Well, when you're doing that and you're doing it into a pre-tax vehicle like a 401k, all you're doing is you're simply just trying to avoid paying the taxes on the seed right now. But one day when you get ready to turn that into income, because we eventually have to turn those assets into income, right? We have to move from the accumulation phase to the distribution phase.
Yep.
And when we turn those assets into income, we're doing so with literally a blank check to the government. We have no idea what tax rates are going to be. We have no idea what the tax laws are going to be then, because the tax laws are written in pencil. We all know that.
Yep, I'll,
So
I'll, I'll jump in on that.
yeah,
So I heard a great example the other day. I know you probably heard this one. Who would enter into a mortgage where you're going to enter into a mortgage for 20 years
yeah,
and they're not going to tell you what the interest rate is right now? You just enter into it. You just have to kind of see what it is in 20 years. Such an incredible example because that's what people are really doing. Again, if they put
yeah,
100% of their eggs into that tax deferred basket, that's the that's the
yeah.
reality of it. And so this is a way to at least take some component of that, put it in the tax free bucket.
Well, exactly. And where's the peace of mind in that? If you have all of your eggs in one basket, if you have everything committed to, pre-tax 401k traditional IRAs, you have no strategy in the future, because you're just completely at the mercy of what tax rates are going to be. And that's not how you sleep at night, right? I mean, that's not how you sleep at night when you're 35 years old, and you certainly are not going to sleep well with that huge bucket of money one day when you're 65 and 70 years old. And you have to start taking those required minimum distributions, and you don't want it. You don't want the additional income. You don't need the additional income. So many of our clients don't need that additional income, but they have to take it and they have to pay taxes on it. Sometimes it throws them in a higher tax bracket. So why not build some diversification? And instead of using the concept of let's pay taxes on the crop, why don't we just do what any farmer anywhere in this country would do if given the chance? Let's just pay taxes on the seed, and let's harvest all of that crop one day income tax free, and have that peace of mind of knowing that whatever happens, I know I've got this asset that is built inside of a contract, with grandfathered contract rules, and knowing that at least that portion of my life is guaranteed tax-free income.
Yeah, you're speaking my language, of course, and all of our language, I guess, at IND being we're peace promoters in the financial arena. And I agonize a little bit over the fact that we're in a society that seems to be just bent against peace. The idea that you're supposed to have all your money in tax deferred and not knowing what taxes are going to be, the idea that you're supposed to have all your money in market risk prone investments. Those two pieces of the puzzle, I think, are the things that you're addressing here with this idea, and appreciate
Sure.
how you do things, Jason, and you want people to accomplish this,
Yeah.
this piece and this component of their plan. Again, not saying don't have any money in the market. We're just talking about a component that's very necessary in a financial plan. So
Yeah,
really glad that you shared overfunding. And I know you can do overfunding with other products, whole life, and you help some
sure.
folks with that as well. Anything else you want to add on overfunding?
Steve, just it just makes so much sense to be diversified. 16 years of doing this. The piece about the overfunding as well that a lot of people overlook is that even though we're not typically doing this for death benefit, in my 16 years, I've delivered, unfortunately, my share of death claims, and I've never had a widow turn down a check, right? Say, we don't need it. So you're sitting here, you're rolling this money into your 401k, you're taking advantage of everything. But if life if life quits for you, I would much rather still bring your family that check for $300,000 or $400,000 than say, hey, you know, well, at least you got the 401k sitting over at company X that's got $37,000 in it, right? So there's a big component of that safety, of that taking care of your family, knowing that you're doing this mainly for the tax-free retirement advantages one day, but you've always got that death benefit to fall back on to take care of your family. And that's what we want as husbands. That's what we want as dads. As moms and dads, we want to be able to provide that security and that safety for the family. And this is just a great concept that does that for you.
Yeah, huge component of the piece, in my experience, is the death benefit as
Yep.
a former trust and estates attorney for many years. And so, again, you're speaking the language of peace on that. Jason, thanks for offering some perspective on
Sure,
overfunded
Steve.
life. If anybody's watching and you want to get with Jason just to see how this overfunding strategy can work for you, look at some real numbers. I encourage you to do that. Wherever you're watching, there'll be a link. And we'll have some more of these topics coming down the pike. So subscribe. Also, leave comments if you have questions about this. Happy to respond to any comments. And with that, we'll see you all in the next one.